So, guys, we have Seth Somers here today with us. He is our trustee processor at Revolution Mortgage. After the loan leaves Chris Parrish's hands, it goes to Seth, and he just makes sure that the loan is going to close on time, that it's perfect. And we are so glad to have him.
Throughout this video, you are going to hear some terms you may not be familiar with, such as AUS, automated underwriting, loan to value, and findings, and all kinds of interesting terms. So I would love for you to know what those terms mean. I think it's important. You can check out the video that I have on Mortgages 101. It has all of these terms and more in there. And then that way this video will make more sense to you. I hope you enjoy it.
The company is small enough, thankfully, that it is very communication oriented and problem solving oriented. And that doesn't just start with the people like me and Chris that are going to be interacting with clients. That goes all the way up to the top dogs and the underwriting managers and the director of operations and directors of sales. And we get people involved when we need to, and they make sure that they are there to assist.
That is incredible. It is amazing. It's like no other company that I've ever worked for sure. And so I appreciate you reiterating that. And so, there would be times in my, previous thing in mortgage that the processor would go like, well, I've got a problem with this. And the processor's, an underwriter's got a problem with this, and loan officer, you fix it. And that's sometimes okay. But do you find that you try to find fixes on your own before having to go to Chris? Or
yeah, I mean, I think that's another piece too that is significantly different here than at other companies that I have been. It is almost my responsibility and underwriter's responsibility to try to assist and try to find solutions. And we don't have brand new people here on our team, or at least that we work with Chris, so we've got some experienced and veteran staff that can maybe put our heads together and try to figure out and come to solutions together, instead of just saying, sorry, buddy, you're on your own, Chris, and just let us know when this is fixed. So
right. And then he has to scramble to try to figure out, maybe there's a different program, but you're able to do that. You're able to say, hey, this doesn't really quite fit an FHA. Let's try, a conventional Freddie Mac or Fannie Mae loan.
Yeah. Going back to even just the additional technology that we've implemented here in the last 60 days, that will run Freddie Mac and Fannie side by side and evaluate the file and provide us with results real time. So that takes about 60 seconds to run. And then we're able to say, hey, Chris, you get an appraisal waiver with Fannie, but the file's set up with Freddie. So do you want to have the borrower pay for an appraisal, or do we want to move forward with Fannie and not even require an appraisal? So,
wow. And guys, this will all be covered in other videos, because we're talking about some stuff that, like, who's Freddie and Fannie? Are they employees at Revolution, and what's automated underwriting? So please do check out the other videos on that. But if you could tell us a little bit about what happens with this automated underwriting. What do you mean? Is it like bots or AI, or what do you mean?
Yeah, kinda. So at any point, whenever Chris gets an entire file set up, and he's ready to submit it to me or to an underwriter, he does have to run an automated underwriting system, which is the AUS, and that evaluates the entirety of the file, and it lets him know right away, again within 60 seconds, whether or not we have an approved and an eligible file to be able to submit to an investor, or if we have an ineligible file that might need a couple tweaks here and there in order to get to an approved status. So it is a way for us, it's a checks and balances for us on the front lines to be able to say, hey, the way that we set up the file is correct, and it will suffice with underwriting. Even though additional documentation, of course, will be required, the file and in its entirety as it's set up will work. So,
wow. And at some companies, it still goes on. I know, because I have friends that are in the mortgage business at other companies. They have to run the AUS for Freddie Mac, and then if it doesn't work, they have to run it for Fannie. And you're telling me you run them simultaneously, side by side. Wow.
And then get results.
Yeah. And you can see which one is better for the borrower.
And there's situations too, even, with borrower documentation, that one program like the Freddie Mac side may require less documentation than what Fannie Mae does. So there's, different pros and cons to going both ways. Maybe there's different pricing breaks on the interest rate, but it all depends on, the entirety of the file. So it's not as easy as Fannie's always, going to be the way to go, or Freddie's always going to be the way to go. And that's why that's why we've implemented that technology to run them side by side and then evaluate ourselves as to what the best route for the client would be.
Wow, that is great. And so less documentation, yeah, that's easier on you, Mr. Borrower, Mrs. Borrower. But what's the other advantage of having less documentation? Going for like the less stuff to find problems with.
Yeah, I mean that's exactly it. The less documentation that you have, then typically the less questions, or the lesser questions that an underwriter will have. So if we can get away with, a bank statement that has, a surplus in funds to close and is maybe just a savings account which accrues interest and there's no transactions, coming in and out, we're going to go that route all day long, as opposed to a checking account which might open up cans of worms as to recurring liabilities or who's this Venmo payment to, and just, some ridiculous things.
Right, exactly. Fewer questions, less exposure. And an appraisal waiver, is that just what it sounds like, where the borrower doesn't actually need an appraisal?
Sure is. Maybe a common misconception that an appraisal is required on every purchase or refi or real estate transaction that we go through. Typically, I would say typically that those scenarios in the appraisal waivers are granted for files that are deemed as lower on the risk scale by the automated underwriting system. So low loan to value, meaning the amount that you're trying to borrow versus what the property is worth, is low. Typically low debt to income, so the amount of debt that you hold as a borrower and compared to the income that you make. And again, funds to close if needed or if required. But typically for appraisal waivers, they're pretty generous when it comes to like refinancing. So when I used to originate prior to being a processor, that was one thing that I got good at and was taught, is to how to kind of set the file up to give yourself the best chances at not needing an appraisal. If that was,
you know how to do that?
I wanted to go. I do know how to do that.
That's very, very cool. That's a trick, right? And guys,
it is.
What Seth is explaining takes years to figure out. You don't come into the business, and figure out these tips and tricks. There's no manual, right, Seth? I mean, not really. I mean, you learn this stuff as you go, and it takes someone like Seth, right, or you collaborate with each other, right? You have other processors that y'all share information. That's huge. You're not working in this little vacuum, right?
Absolutely. And even the automated underwriting systems, the guidelines that we are going off of, they're changing constantly. So there's no way to master our craft and be able to know every detail about every program and every scenario, because the requirements are constantly changing. So as we are, we come up with scenarios and are working with different borrowers and files that, hey, I just had this. Has anybody had to deal with this before? Oh, I had, 4 years ago.
Right.
So sometimes those solutions, sometimes those solutions are easy, and sometimes it's like, hey, the guidelines have changed since then, so we're going to have to find a different solution, or but that happens constantly.
Right. And you can just message them on like your team system, and y'all all share ideas, and you can kind of probably reach out to more than one person at the same time and
absolutely
here. And
typically start with the internal, with our branch of our processors and our processing managers. Hey, anybody experienced this before? But of course, if we haven't, we're picking up the phone and we're calling the underwriters, who can also elaborate into what would be required if we don't have I haven't experienced this before. Here's what we could get though in order to clear the hurdle that we need to. So.
And the guidelines changing all the time. That's not unique to Revolution, right? That's in all the different loans, anywhere you might go for a loan.
Yep, absolutely. Those are federal guidelines. So the Fannie Mae and Freddie Mac, these are federal guidelines and systems that we are following. Any guideline and any requirement that's going to be required anywhere in the country, any lender in the country. So not just here at Revolution. Again, I would argue it's probably going to be the path of least resistance here at Revolution because of the technology that we have and the way that we're able to minimize the amount of documentation from a borrower.
Yes. I just love that. So you described the automated underwriting system, or AUS, as we refer to it. So what does it look at, like a series of algorithms? It has like algorithms built into it, right? Then it looks at credit and the debt to income and all these different things. It takes that all.
Yeah, so that's exactly it. It'll take a peek at each facet of the file. So the credit report, the income documents, the asset documents, and again, like the subject property, if there are other properties that are owned by the borrower. But in the credit piece, it goes as deep as your previous credit history. So whether that's the addresses that you have lived, like we've talked about, your previous addresses where you've lived, your previous jobs, your previous credit accounts that have been opened. If there are, unfortunately, any delinquent accounts, we're going to need reasons and explanations as to why those came up. And it takes the entire financial picture into account. So when we get an approved eligible file with the automated underwriting system, that is what we're going for. That's a plus.
Yeah. Oh, that's awesome. So what's your motivation like personally? Say a loan, guys, loans are going to have things come up. Seth and I were talking about almost every loan has something. What's your motivation for not saying, to heck with it, I'm just going to move on to the next one or whatever?
Yeah, like I said, I just bought my first home with my wife in 2019. So coming on 4 years now, actually just over 4 years now. I was originating at that point, but I didn't know the process yet. I had just started in the industry. I was at a point where it was, hey, documentation. And I was like, whoa, I don't know if I want to do this anymore because this seems kind of silly. But I also realized that given our situation, because I had just started, there was a chance that we weren't going to be able to qualify for the loan. And so being able to say, hey, not only do I want to have a house for myself and for my wife and for my family, but I want to make sure that nobody has to feel like they're not able or good enough to be able to qualify for what they want. So I really enjoy being able to help clients who maybe are first-time home buyers, or they're kind of on the fence as to whether or not they should be doing this, or if this is the right house for them, or if it's even the right time to purchase a home. And say, hey, I don't think there's a bad time to purchase a home because of the way that, real estate appreciates, and even in the current market that we're in right now. But no, the reason I do what I do is because I have gone through the process myself, and I know what it has provided for me and for my family, to be able to have a house and to be established. And there isn't anything that could take that away from me at this point. And so I want to be able to make sure that if we have clients out there who are looking for first home, 10th home, it is still a home. So we need to make that happen.
Yeah, still a big deal. Oh, that is so awesome. So how long have y'all been married?
We've been married for 6 years now in August. So.
You look so young. Holy cow. Any babies yet?
No babies, and probably not in the near future.
Okay.
Yeah, because we are so young. So we're taking advantage of that.
Okay, I was gonna say you look like you're just out of high school. Okay, so that's awesome. Any
I was not married at 15, I promise.
Okay, all right.
Yeah, no, I am a proud cat dad. We have 3 little kitties. Yeah.
Oh, so sweet. And you get to work from home with your babies?
I do. Yep. If there was one in the room right now, I would show you, but
that's okay. Just our luck, right? We don't have a cat. That is very, very cool. And that's kind of my story too. I got into the mortgage business, just trying to muscle through my own loans, and I'm a lot older than you, and it took oh my goodness, Seth, it was a whole different process back then. But so you've got a heart for these borrowers, and you understand, and you know what it's like to have a home, right? It's meant a lot to you and your wife, right? Big changes, right?
It is. Yep. And now a home for our little kitties. So.
Yes, and now a home for the wee ones. That's awesome. So I love that. Any other stories that you want to tell? don't feel pressured, if there's anything else.
I don't have anything else. Yeah,
Yes.
I'm good to go.
Awesome, Blossom. I am just so grateful to be able to spend this time with you. I have a passion for Revolution Mortgage, guys, and you know that from my other video, Revolution, and it's like no other, guys. And so one example of how caring and wonderful and just different, I mean, the culture at Revolution, right, it's just different.
It is different. It's positively different. Yep.
Yes, positively different. Very, very special. I love it. So, well, thank you so much. I know you got to get back to what you're doing over there. Just loved spending time with you, Mr. Seth.
Likewise. Thank you for the invite. Thanks for having me.
You bet. Thanks for being here. Bye. Thank you so much for watching this video. Stay tuned. There's going to be so much more information down the line.